Scotgold Resources, an AIM-listed gold company, which is commissioning the first phase of the high-grade, low-cost Cononish gold-silver mine in Scotland's Grampian Mountains. The company's got a market cap of £68 million, and we've got today the CEO of the company, Richard Gray, to present on the company. Richard, over to you.
Thank you very much, Keith. And I'll move straight on. Where I say I'm representing Scotgold. We do what we say on the can. We're producing gold in Scotland. Quickly move on through the slides. I think we can start off with a conventional title and disclaimer. Obviously, there are some forward-looking statements in this, so please read and digest. Next slide, please. So just a bit of an overview of the company. We're an AIM-listed company. We are actually Australian domiciled. That's a legacy issue, really. All our management and operations and everything are UK based. Cononish is our flagship gold and silver mine. We're predominantly gold. Silver represents about 5% of our value for those that are interested. But high grades, you're talking about 11.7 gram a ton gold equivalent, and giving us an all-in sustaining cost of around about the $600 an ounce mark. So well down the bottom quartile. I think, and then to get to where we are, we're just about to start producing, and we've done it in a phased approach. One of the issues for a gold mine of our size, which we are small, has been access to capital, which is too small for the conventional gold market players. And therefore, we've done it in a phased approach. We're going half scale for phase one, and then expanding to phase two using internally generated cash. So we're on the brink in the next few weeks of commissioning phase one. So that's essentially what we are. We're a company with a mine about to come into production. And where we want to go to is, essentially we've got a pipeline of very prospective exploration projects. So we see the Cononish mine as being the first of several. And we see Cononish being expanded. We have a highly experienced board. We've got a lot of high net worths in there, and basically that's what that makes up the predominance of our shareholder register. And they've been supported through this process, and obviously we anticipate we'll be there in for the long run, and they will be going forward. And so overall, what we want to do is to leverage off the learning curve we've been through getting Cononish to this stage to build the next ones quicker and easier. And if we can use our strong balance sheet going forward to explore and accelerate our exploration, or in sort of M&A type activity, those are all possibilities. So moving on to the next slide. Just a bit about the overall company. As I said, the top left-hand corner, that shows you our sort of very strong supportive shareholder base. Ms. Nat LaRue is our chairman and 41% holder. Bottom top right is a very simple corporate structure. We have the holding company at the top, which is public listed. Underneath that, we have SGZ Cononish, which is the entity which holds the operating mine. And then we have the SGZ Grampian, which holds all our exploration licenses in Scotland. And we would see those licenses, we probably will spin them out into separate vehicles as and when they become advanced enough to warrant that. Our share price has obviously been on the up recently, and we've got a market cap of over 60 million, as we mentioned. And obviously, as we're getting closer to production, we see the discount to our NPV shrinking and further upside. And we believe that currently we're valued on the basis of the NPV from Cononish, but we still got other value drivers, which I'll come on to later on. So moving on to the next slide. That's just the rogues gallery of who we are. Obviously, Nat LaRue is our chairman, as a major shareholder on the top left. But all the people there have a lot of experience either in the industry and a lot of experience as wealth managers of their own funds, and have done very nicely. Thank you. So we're a team of people who know how to get things done and to generate profits and create value from that. Moving on to the next slide. So there's two main legs of the company. As I said, the first one is the Cononish mine, and I'll talk more about that in a minute. And then the next one is obviously then the upside potential, the exploration and development, which I'll talk about thereafter. So Cononish mine itself, as I say, we started on phase one. We had anticipated waiting approximately a couple of years to self-generate funds and fund phase two, but we've recently done a small placement, which has given us sufficient funds to actually accelerate phase 2, and that will bring the phase 2 in the next approximately 17 months, which will bring us up to 23,500 ounces per annum on average. So moving on to the next slide. Just talk about Cononish itself. So first gold is expected at the end of November, so we're just a matter of weeks away. And as you can imagine, there's lots of frantic activity and last minute things going on up here. It's all very exciting. Next slide. This is a bit of an overview of our Cononish mine and the reserves. As I said, we're small, 550,000 tonnes, but very high grade. You know, we're sort of talking a 11.7 gram a tonne gold equivalent. And that's what drives our low costs. It's a relatively small ore body. We've got an adit which runs through the middle of it, which is approximately 750 meters on strike, actually in the adit. The adit itself is a kilometer long, and we're going up from the adit about 160 meters up and about 80 meters down. So very compact little ore body, and that's why we think that there's plenty of scope to find more. So next slide, please. This just basically outlines what the difference between phase 1 and phase 2 is. And we've got an annual production graph there. Obviously, we're targeting the higher grade areas first. That's what gives you your graph at the bottom with the fluctuating gold production, which is obviously driven by grade. And that in turn is driven by where we are in the ore body and how much development we're doing. So in the initial years, there's a lot of ore developed from development drives, which obviously has slightly more dilution and slightly lower grade. And then we get into the stoping of the best bits, and then the grade fluctuates as per the grade model. But say small tonnages, 36,000 tons per annum, moving to 72, and relatively modest gold production from 10,000 up to 23,000 once we get into phase 2. So next slide, please. This just spells out the overall economics of the project, you know, based on that production profile. You know, we're talking about an EBITDA of 178 million, and net cash flow of 127 million, giving us an NPV at 8% discount of some 96 million. You know, they're very nice nice returns on what has been a modest capex. You know, to actually put the mine into production was in the order of about 10 million in terms of total of phase 1 capital. About just over 7 million peak funding. But if you add up all the historic capital on the project, which is what we've done in that bottom left slide there, 34 million, that covers all our historic exploration, and quite a lot of money spent on planning and going through the parks and so forth, which to a certain extent are a lot of school fees. We wouldn't anticipate that the next project costing us quite as much, but regardless of, even if you count all that, it's still an eminently profitable company. So it's not a case of, well, all that sunk and look forward. You know, even taking all the historic costs into effect, we're right up there. So that's the overall. In terms of phase 2, what it's going to cost us to expand, you know, it's about 6.6 million, and that's broken down on the right. Essentially, it's 6.6 that'll be funded by partly from the money we just recently raised, and partly from the profits we'll make over the next 18 months. And that in turn, the reason for the 18 months is because that's a long lead time item. We can't really shorten much more than that. If we could, we would. The reason, as I said earlier on, the reason that we went for the phased approach in the first place was because of the constraints on funding. We struggled to get funding from the big institutions, and therefore that was really why our key shareholders stepped in, but we re-engineered the project in this way. Having stepped in, if we had the funding available on day one, we wouldn't have done the phased approach. We'd have done it, gone straight to the phase 2 production level. So it obviously now, with funds are available, makes sense to go to phase 2 as soon as possible. But say, despite the small scale, we are extremely low cost, and that again is driven by our very, very nice grade. So moving on to the next slide. It's just basically about the mine itself. We say it's a conventional long hole open stoping. We've been practiced in many parts of the world. That's the added in red there. You can see sort of going horizontally, mining up the 160 and a ramp up and a ramp down. Processing also pretty conventional, with the exception that because we're in a national park, we don't have any cyanidation process. which means we produce two products. One is a gold doré, which is basically a gold and some silver and quite a bit of lead and whatever in the doré. That we can smelt locally, and we have the ability to sell that as Scottish gold because it has a proven Scottish provenance. The balance of the gold, some 75%, comes out as a flotation concentrate, and that we sell to smelter directly. Next slide, please. This is just a little bit of a view of where we are with the process plant itself. Well, I was going to treat you to a little bit of a movie here with just a view around the inside of the plant building. Obviously, I said we're weeks away now from production. The key driver, the critical path activity, if you like, to getting into production has been the construction of the processing plant. This is inside the plant on a hillside on the Scottish Highlands, very remote area, very beautiful. But it's all camouflaged, if you like, from an environmental perspective. And inside things are all ready to go, and we have started the commissioning process. So next slide. And just talking about sort of commissioning the process and the camouflaging in inverted commas, we do, obviously, because we're in a national park, for this project, we're strictly and rigorously regulated by the planning authority, which is the Loch Lomond and Trossachs National Park. But we do have a very good relationship with them. Going forward, some 65% of our exploration ground is outside the national park. So, we started with the hard yards, with the hardest one. We think going forward, they should be easier. We've done the school, we've done the school fees on this one, and we know what to do next time around. So next slide, please. Now we move on to the exploration itself, and the exploration has two main goals. One is the sort of near mine targets to extend the life of Cononish, and the next one is obviously to find more mines at a similar or obviously potentially much greater scale than Cononish. Next slide, please. This just gives you a bit of an overview of our land areas and what's being done. As I say, we've got some 2,900 square kilometres of exploration ground under option agreement with the Crown Estate Scotland, and it sits on the Dalradian trend, which is a geological feature which extends from Scandinavia across Scotland through Northern Ireland into North America, and hosts such deposits as the Dalradian deposit in Northern Ireland, which are multi-million ounce. So although we're small, the geological area we're in is very prospective, and the ground we've got is we believe underexplored. Moving on, please. Just a little bit about the exploration, why we think the potential is there. The slide on the top left is an assay we did using soil samples of ionic leach, using the ionic leach methodology. The little black box in the middle bottom left is the outline of the actual Cononish itself ore body. Those along strike to the sort of northeast of that are all new anomalies which we've identified. So we believe there's every prospect of finding sort of more ground at Cononish. The reason we think that will extend the life of mine rather than necessarily enable us to expand production is because it predominantly is one vein, and so based on the sort of mining constraints of access points, etc., we believe that will lead to a extension of the life of mine. And we currently have a 9-year life, and if one looks at the scale of those anomalies, if those were to pan out, we're talking about a significant extension. Looking further afield to the sort of north of us, we have an area called Ben Uli, which is shows the drainage anomalies with the big red blob. And where we've done soils over that, you can see we initially had nothing. We knew there was a big anomaly there. We couldn't quite pin down where was the best bit was, and the most recent results on the southeastern side there, you can see there's a gap, but we've had some very high results coming out of that. So, this is the area, we're all within a sort of 15 kilometres of Cononish, where we've got the most data, and this is the area we found the most prospects so far. The rest of our land package has had nothing like the attention that this has had, so therefore that's what gives us a belief that we're going to find a lot more of these. It's simply that we have more prospects in this area simply because we've looked for them. So moving on to the next slide, please. Although we've got a big land package to deliver on, The thing from our side is, we want to deliver cost effectively. We're not just out there to drill Hail Mary's holes. We've got very specific objectives, which is, I say, to extend Cononish's line of life, and then to replace and expand. So to do that, we've got a very systematic process now. We're using this innovative ionic leach technique as a starter. We then use geophysics to identify the orientation, and then we get onto the drilling, which is the more expensive stuff. So, our view is over the next couple of years, we'll be catching up with the rest of the land package on where Cononish is, and we will have sort of multiple drill-ready targets to pursue. Moving on to the next slide. This basically sums up where we are. We've made the transition from an explorer to a producer with one asset. We're now expanding that. Before we even finished the first phase, we're ready to start an expansion on the second phase. We've got significant upside on that asset from expansion. We've also got a pipeline of growth potential with more exploration ground. We've got extremely supportive shareholders. As I say, Nat LaRue owns 42%, and he does that because he's put money into the company through various rights issues, etc. We've got a commitment for sustainability. We're working in a highly regulated environment. It's highly regulated, but it's low risk in the sense that we're in Scotland. From that perspective, what security, tenure, etc., is not an issue. And that presents the market opportunity. So what we've got is a young company here, which is starting off at the bottom end of the value scale. It's got all the jigsaw pieces to create a much bigger company. And now that we're in the point of view where we have achieving production from phase one, which in 2021 will lead us through to positive cash flow, that puts us in the destiny in our own hands in terms of delivering on the exploration upside and further value for our shareholders. So I think with that, I'll hand over for any questions.
Thank you very much. The first question is, what impact has coronavirus had on your company and its operations, if any?
Well, during the lockdown period back in March, April, it obviously put a big dent in our timeline. Essentially, we were unable to take advantage of the furlough scheme. So most of our employees were furloughed. We kept on a skeleton crew who did the sort of care and maintenance of the earthworks, etc., etc. As soon as the lockdown was eased, we've been back at work. And so with the current restrictions, the guys are, there's nowhere to go for a drink in a pub after work at the weekend. But apart from that, people can get to and from work, and we're continuing as normal. There are risks associated with it. We've had a couple of scares, if you like, with one or two employees, or direct employees or contractors who've come down with COVID-like symptoms, and so we've had to apply our procedures to isolate them until they got a negative test, which, touch wood, so far everybody has. But there is always that risk that if a big group of our guys came down with it, we would need to isolate people, which then could have a delaying effect on our schedule. But it won't have a material impact on the project. It will just be a matter of relatively minor.
The next question is about the change in investor attitudes. You said you had a phased program because of funding. What were the objections, or what were the pushbacks at the time? And then how has the investor sentiment changed since then? And why do you think that is?
Well, the pushbacks at the time was we were looking for, at the time, in the order of sort of 20 to 25 million pounds. And when you go to the big conventional institutions that lend money to gold mining projects, the big banks, I can name a few, I'm sure everybody knows them. They're talking about 1 to 2 million in due diligence costs. They're normally writing tickets for 100 to 200 million rather than 10 to 20. And so that doesn't really stack up from a small company's perspective. So it made what would have been reasonable debt finance expensive. Plus, it gives us the uncertainty that you have to wait 6 months for the due diligence process to complete, and then you go through a credit committee and you don't know if you've got it or not. So that's why that sort of didn't really work from our perspective or the institution's perspective. And going for the smaller route, the other alternative was to go through some more equity-related sort of funds. They were willing to offer us money, but extremely dilutive terms, which wasn't great for the existing shareholders, and we felt we would sort of lose control of the company by doing so. So rather than that, we re-engineered it to create a smaller first step, smaller hurdle, which then our supportive shareholders through a rights issue initially and subsequent raisings have funded. So that's enabled the current shareholders to benefit from the value of the project. In terms of how it's changed, yes, we got a lot more people now phoning me saying, "Would we like money?" Some umbrella. We've all been offered umbrellas now. The sun's coming out.
So the next question is related to what we've just talking about. So, how does the board look at debt versus equity as a source of funding today, and how might that change in the future?
Well, we don't have any big needs on the horizon for funding. That's the first thing to say. We anticipate that the funding we've got will fulfil our plans. And obviously, once the cash starts rolling in, the question was, how much do we spend on exploration? How much do we think is a prudent amount to keep us in a little bit of a war chest should any opportunities arise going forward? And then if there's anything left thereafter, what do we do about a dividend policy? So that's more on our mind than where we want to raise future money. I think throughout our objective has been to minimise dilution and get debt where we can cost effectively, and debt which as we've been very fortunate to get debt largely through our key shareholder through Natlaru. But the debt we've looked at commercially, we didn't want debt which had a lot of strings attached to it, and potentially we could lose the company if things didn't quite pan out.
So inevitably, the next question is about your dividend policy, and can you give some more granularity about the time frame and how the board would assess the policy whenever it's appropriate?
Well, we don't have a dividend policy at this point in time. I think it's probably a bit premature to state, but I mean it's pretty blindingly obvious when you look at our numbers. We are going to be a cash cow. We're going to be producing more than we can, responsibly spend. But we do, in the short term, there are a lot of opportunities for us to improve our finances. By reducing our debt, reducing those finance costs, by increasing our exploration, so forth. So we'll spend our money on that first. There are lots of other opportunities we can do to improve the assets we've got. And once we've done all that, we'll think about the dividend policy.
Okay, thank you. So the next question is about the current plant that's being constructed, and will it process ore from additional mines, or will you have to make?
No, it won't. And the reason it won't is because being in the national park, it's very prescriptive planning permit we have, and it's the mine which is taken from the Cononish ore body, which goes through the plant, which is located right there by the portal. The one thing the parks don't want is trucks running up and down the glen through the park. So definitely we won't be doing any toll processing. If we find just the other side of the hill, we are actually outside the park. So if there was another deposit or two we find, yes, we could definitely look at the concept of a centralised processing plant or several other deposits, and potentially those might include additional deposits to Cononish, but we won't be importing material to the Cononish plant. See that.
Okay, thank you very much. I've got one last question which we can get in. Can you expand on your gold retailing initiatives for your output?
Okay, yes, we've got two jewellers which have worked very closely with over many years. So the gold we produce through Dore goes through a chain of custody, basically with proven provenance, through the Edinburgh Assay Office, through the refiner and onto the jewellers. And because we've had the long relationship with them and they've been supportive, we've agreed with them that they will take the production for next year. They both want as much as they can get, so we will share between them next year. Thereafter, we will look at how we will share it with other interested parties, and we have a lot of jewellers and other institutions that are very keen to get hold of our gold. And I know our gold is gold, but gold which has proven provenance in Scotland has that certain cachet that's worth something.